let's start the new topic within the blockchain technologies, which is evolution and future of digital payments. And first of all, let me share with you the so-called journey of payment systems transformation. So we'll examine how traditional payment methods has given way to digital alternatives and why this shift is fundamentally changing the financial landscape. And I'll walk you through the key technologies, breakthroughs, and emerging trends and future scenarios that are shaping the payment industry. And throughout the lecture, I'll be highlighting the most significant developments in digital payments, including mobile wallets, instant payments, cryptography, and cryptocurrency, and also central bank digital currencies. And we will also discuss how these innovations are affecting businesses, consumers, and the global economy overall. And as to me, what makes the topic particularly is that we are not just studying history. We've living through a period of unprecedented change in how people handle money and make payments. And by the end of this lecture, I hope you'll have a comprehensive understanding of where we've been and where we're headed in the world of digital payments. Next slide. Now let me take you on a journey through the history of payments, starting from the very beginning. When I think about how far we have come, it's to consider that our ancestors began with the simple bartering systems around 10,000 BCE. I wanted to imagine a world where people traded livestock, shells, and other commodities directly for the goods they needed. And this system of bartering and using commodity money persisted for thousands of years. But as a next stage, significant breakthrough came between 1000 and 600 BCE when standardized coins emerged in China and Asia. And this was a revolutionary development because for the first time, people had a uniform medium of exchange that everyone agreed upon. And what is really interesting is that it wasn't until around 800 CE that paper money started circulating in China. And you can think about that. It took humanity nearly another 1,400 years after the invention of coins just to develop and trust paper as a form of currency. So this shows us how deeply ingrained the concept of intrinsic value and how it was in early payment systems. And these early innovations laid the groundwork for everything we'll discuss today about modern digital payments. And when we look at cryptocurrency or mobile payments, we are really seeing the latest chapter in the long evaluation of how humans exchange value. Therefore, now let's fast forward to what I consider one of the most transformative periods in payment history. For example, in 1851, we saw the founding on Western Union, and this is particularly significant because it was just about creating a telegraph systems. It represented the first major step forward, building an interconnected payment network that could transfer value almost instantly across long distances. And therefore, I want to draw your attention to the 1920s, when we saw the emergence of something quite revolutionary like charge cards. and they were initially issued by individual stores, by hotels, and also businesses. And this was the first time in history that consumers could make purchases without immediately exchanging physical currency. And a pivotal moment came in 1950 with the launch of Diners Club, which was the world's first credit card. And what makes this so interesting is that it was the first time a third party stepped between merchants and consumers to facilitate payments. And then during the 1950s and 60s, we witnessed the establishment of the payment giants we all know today, like Visa, like MasterCard, and even American Express. And looking at this evolution, you can see how each innovation built upon the previous one created increasingly sophisticated payment networks. And these developments laid the crucial foundation for the digital payment systems we use today. Now let me share with you what I consider to be one of the most fascinating transitions in payment history, which is the move to digital and mobile payments. And what's about this period is how quickly technology transformed the way we pay for goods and services. And you might be interested to know that, for example, one of the first significant milestones in e-commerce was when Pizza Hut launched online purchasing on their website. And this might seem trivial now, but it was a revolutionary at that time, because just imagine how you're being able to order and pay for pizza without picking up the phone. So that was very impressive in that time. And this was followed by the emergence of groundbreaking services like PayPal and internet-only banks like ING Direct, which fundamentally changed how we think about money transfers and banking. And then came what I believe to be the real game changer, mobile payments. And it started with the pilot projects in the early 20th, 2000s, sorry. But the real revolution happened with the introduction of services like Apple Pay, like Google Pay, Samsung Pay, and these platforms essentially turned our phones into digital wallets. And what fascinates me more about this evolution is the speed of the adoption. Because in just a few decades, we went from being amazed at ordering pizza online to casually tapping our phones to pay for almost anything. And this rapid transformation sets the stage for the future innovations we'll discuss later in the lecture. So now I would like to say that when I look at the transformation of payments in the 2000s, so I'm struck by the sheer pace and scale of change. And this was truly a revolutionary decade that reshaped how we think about how to handle money. And now let me explain why this period was so significant. It wasn't just about the introduction of new technology. It was about fundamental shift in consumer behavior and business models. And for example, we saw the emergence of digital-first payment solutions that completely transformed the traditional banking landscape. And what I find interesting about this is how it democratized financial services, because suddenly anyone with a smartphone could access sophisticated payment services that were previously only available through traditional banking relationships. And we saw Now, for example, the rise of peer-to-peer payments, digital wallets, and mobile banking applications that made financial transactions more accessible than ever before. And now here, I would like to emphasize that this wasn't just about convenience, it was about creating entirely new possibilities for commerce and financial inclusion. And the overall, the innovations of 2000s laid the groundwork for many of the payment technologies we take for granted, and understanding this period is crucial for grasping where we are headed next. Now, let me share some statistics that demonstrate the momentum of instant payment adoption globally. And what I find interesting here is the dramatic growth rates we're seeing across different regions. For example, take Denmark. For example, they have experienced a 35% growth in instant payment volumes. And even more impressive is Sweden and Mexico, where growth has exceeded 60% within just 4 years of launching their systems. And these numbers aren't just statistics, so they represent a fundamental shift in how people expect money to move. And I want to highlight some particularly successful implementation that driving this rapid adoption. Because, for example, Singapore's Pay Now system or India's UPI, which is an abbreviation of the Unified Payment Interface, and various initiatives across the European Union are all setting new standards for instant payments. And what makes this system so successful, in my view, is their ability to combine speed and security and accessibility. And the beauty of instant payment systems is that they are solving a real pain point, which is the delay in traditional bank transfers. And for example, when I look at this adoption rates, I see more than just numbers. So I see a clear indication that consumers and businesses are embracing real-time payments as the new normal. And moreover, this trend is reshaping our expectations about how quickly money should move into the digital age. The next slide. What excites me most about the current payment landscape is the explosive growth we are seeing in alternative payments methods. And now let me share some figures that illustrate this trend. Because when I look at the buy now, pay later, for example, or BNPL services, the numbers are staggering, and global transaction values are expected to reach $995 billion by 2026. So this isn't just about offering credit, it's about reimagining how customers manage their purchasing power and cash flows. And here, what I find interesting, telling that 90% of consumers who were using cash or checks before the pandemic now expect to use more digital payments going forward. And this, as to me, this represents a massive shift in consumer behavior that I really believe will be permanent. And the pandemic hasn't just accelerated digital adoption, so it's fundamentally changed payment preferences. So now let's talk about QR code payments, because they have achieved a transaction value of $300 billion in 2022. And what fascinates me about this technology is its simplicity and accessibility, because it requires minimal infrastructure, yet provides a seamless payment experience. And this is really particularly important in emerging markets where, for example, traditional payment infrastructure might be lacking. And overall, these trends tell us something crucial about the future of payments. For example, consumers are increasingly seeking flexibility and convenience and digital-first solutions as well. The next slide. And looking at this timeline of digital payments evolution, I'm really struck by how each innovation has built upon previous developments to create increasingly sophisticated payment systems. So let me walk you through what I see as the key evolutionary stages. What is fascinating about this progression is how we have moved from simple digital transactions to complex, for example, integrated payment ecosystem. And when I analyze this evolution, I notice that each new development has made payments faster and more convenient and more accessible to a broader range of users. And I wanted to pay particular attention, for example, to how the pace of innovation has accelerated in recent years, because what used to take decades to evolve now transforms in just a few years. And this acceleration is just about technology, so it's about changing consumer expectations and business models. And one thing I find particularly noteworthy is how this evolution isn't linear, so it's multidimensional. And we are now just seeing improvements in existing payments methods. So we are witnessing the emergence of entirely new payment paradigms. And this, as to my opinion, evolutionary pattern suggests that we are likely to see even more dramatic changes in the coming year. The next slide. And therefore, when I look at the payments landscape, I really see disruption happening on multiple fronts simultaneously. And I want to emphasize why this is so significant to all of us in the industry. And what makes this period particularly is what we are not just dealing with technological disruptions, also that's certainly a major factor, but nevertheless, we are seeing fundamental changes in consumer behavior, regulatory frameworks, and business models all happening at the same time. And I'd like to point out that traditional payment providers are facing challenges from multiple directions. For example, fintech startups, big tech companies, and even retailers are entering the payment space. And what I find most interesting is how these new entrants are not just competing on the price or efficiency, they are reimagining the entire payment experience. And the intensity of this disruption is unprecedented, in my view, because we are seeing changes that would have taken decades to implement in the past, and now this is happening in just a few years. And this creates both opportunities and challenges for sure for the industry players, and understanding these dynamics is really crucial for anyone working in or studying financial technology. The next slide. And now I would like to draw your attention to what I consider the most significant payment innovations I have ever seen in the last 5 years. And this is of a real particularity, because this is very interesting how mobile technology and enhanced connectivity have transformed the way we think about payments. And when I, for example, analyze these recent innovations, what strikes me most is that they're not just about moving money, so they're about creating entirely new value propositions. And these solutions are leveraging the ubiquity of smartphones and high-speed internet to make payments not just simpler, but smarter. And now let me emphasize something crucial here. For example, successful innovations in this space have managed to overcome two major challenges simultaneously. First, we have simplified the user interface to the point where payments become almost invisible. So, and second, we have added layers of value here because whether through rewards, data insights, or integration with other services. And this is really interesting is how these innovations are breaking down traditional boundaries between payments or even banking and commerce, because they are creating ecosystems where the payments itself is just one part of the broader, and I would say which is more integrated customer experience. And almost this trend, in my view, is reshaping not just how we pay, but how we think about money and value exchange. The next slide. So, in my years of studying payment innovations, I have really identified several key characteristics that successful solutions tend to share. And I'd like to share these insights with you here. What I find interesting is that successful payment innovations aren't just about technology, so they embody a specific set of characteristics that make them particularly appealing to users and sustainable for providers. And from my analysis, these successful innovations consistently demonstrate a combination of seamless user experience and also robust security and also clear value proposition. And now let me tell you what I believe is the most crucial here. I think it's successful payment innovations solve real problems for users while creating new opportunities for businesses. They don't just digitize existing processes, so they really reimagine them entirely. And in my experience, the most successful solutions are those that manage to balance innovations with the reliability and also simplicity and sophistication in addition. And for example, when I look at the market leaders in payment innovation, I notice that all share one critical characteristics. So that is, they have managed to make complex technology feel effortless, especially to the user, to the end user. And this is not small feat, and it's why understanding these common characteristics is so vital for anyone working in financial industry, for example, or in digital payments. Next slide. Now let me explain why I believe cloud migration is absolutely crucial for the future of banking and payment networks. And in my experience, working with the financial institutions, I've really seen how transformative this shift can be. So, and what is interesting here and what I find compelling about this transition is that it's driven by several key factors. And first and foremost, we are seeing that core banking platform and payments as a service investments are being propelled by the need to enable alternative payments. But it's not just about new payments methods, so it's also about maintaining technological currency and also standardization and which is most importantly, interoperability. So here's what really excites me about this shift is modern cloud-based infrastructure, which has opened up entirely new possibilities for leveraging data. because, for example, when banks move to the cloud, they are not just modernizing their technological stack, but they are creating new opportunities for personalization and for innovation. And the ability to use APIs, for example, and microservices architecture means that banks can rapidly deploy new services and integrate with the fintech partners. And here, I would like to emphasize that this isn't just a technical upgrade, so it's a strategic imperative. And in my view, banks that don't make this transition risk falling behind in their ability to serve increasingly demanding digital-first customers. The next slide. And now, I'd like to discuss how data analytics and artificial intelligence are transforming the payments landscape. So as we move forward, personalization and data insights become crucial differentiators in our industry. And now, let me highlight three key aspects of this transformation. And first is while transaction processing is becoming commoditized, the real value lies in leveraging analytics over aggregated data. And this is where the future of differentiation lies. And what's particularly interesting is how we are seeing increased transparency for customers, because through artificial intelligence and machine learning, we can now provide tailored recommendations and valuable insights, such as accurate cash flow predictions, for example. And from my experience working with the financial institutions, I have observed that those who successfully implement personalization strategies are really seeing significantly higher customer engagement rates. And the ability to analyze payment patterns and provide personalized services is really becoming a game changer. And you can consider this, for example, when we combine transactional data with artificial intelligence capabilities, we can predict customer needs before they even arise. And this proactive approach is revolutionizing how we think about payment services. And in my view, this shift toward data-driven personalization really represents one of the most significant changes in our industry since the introduction of digital payments, because banks and payment providers who fail to adapt to this trend risk falling behind. Next slide. And looking at this chart, I would like to share with you how banks are currently positioning in terms of leveraging their data assets, because what we are seeing here is quite revealing about the industry's digital maturity. You can see at the top of our maturity scale, we have what I would call the pioneers. So, or for about 18% of firms that are really leading the way. And these organizations not only view data as a strategic asset, but they are actively sharing it with third parties to create additional value. And this is truly cutting edge in our industry. And here, moving down the scale, we find that 27% of the companies have taken significant steps forward by leveraging external data to enhance their customer experience. And from my experience, this approach is particularly effective in creating more comprehensive customer profiles and better service offerings. And what I find interesting here is that 40% of the companies and this is the largest segment. They are focusing on utilizing their internal data. And while this is a good starting point, I believe that there is still significant untapped potential in external data integration. And perhaps most concerning is that 15% of the companies are still not utilizing their transactional data at all, because in today's digital economy, this represents a significant missed opportunity. And these institutions, for sure, risk falling behind as the industry continues to evolve. And looking at this distribution, finally, it's clear to me that we are still in the early stages of data maturity in banking, and the opportunity for growth and improvement is substantial. The next slide. Now let me share some developments in the payment aggregation space that are fundamentally changing how we think about customer connectivity and also value creation. And here I want to highlight an example like Plate, which is a company that has achieved $13 billion in valuation. And what's about their success and how they have leveraged payment aggregation capabilities to create unprecedented connectivity. So they now connect to over 11,000 of banks and handle more than $1 trillion in transaction volume annually. And this really demonstrates the immense value potential in this space. And what is really interesting here, and I want you to understand, is how account aggregation is evolving. So it's not just about connecting accounts anymore. When we supplement this with the transaction data enrichment, for example, we are creating powerful new gateways to customer engagement. And from my experience, for example, working with the financial institutions, I've observed that these aggregation capabilities are becoming crucial competitive differentiators. And they are not just technical features, so they are strategic assets that open up entirely new business models and revenue streams. And we can think about this in the following way. For example, these gateways are essentially becoming the new front door to financial services. And by providing a single point of access to multiple financial relationships, we are now fundamentally changing how customers interact with their financial services provider. The next slide. And by this, I would like to share some insights about central bank digital currencies, or CBDCs, and why they are becoming increasingly important in our global financial system. Well, according to recent research from the Bank for International Settlements, approximately 60% of central banks worldwide are actively exploring CBDCs. And this isn't just a trend, it's a fundamental shift in how we think about national payment infrastructure. And let me highlight 4 key aspects that I believe are crucial to understand here. First, first of them, the different technology approaches being considered for retail versus wholesale CBDCs is a key. And from my experience working with the financial institutions, for example, I can tell you that these distinctions are critical for implementation strategies. And what I find interesting here is the potential of tokenized programmable variants, because this could enable smart contracts which otherwise especially automate agreements and transactions. And this is truly revolutionary for the future of money. However, I must point out that this transformation won't be without challenges. And one of the most significant considerations in the potential impact on commercial banks. So we are likely to see substantial changes in how deposit servicing and lending operate. And in my view, this represents one of the most significant transformation in monetary policy and payment systems since the introduction of digital banking even. And this is not just about digitizing currency. It's about reimagining the entire financial infrastructure. The next slide. And now let me share my perspective on how cryptocurrencies and stable coins are reshaping the global payments landscape. And this is a topic that generates a lot of discussion in our industry, and for good reason. From what I have observed in the market, while cryptocurrencies offer significant advantages in terms of disintermediation, their adoption remains rather volatile, and this volatility is one of the key changes and problems that has been holding back widespread adoption in mainstream payment systems. And however, what I want to emphasize your attention on is the evolution of asset-linked stable coins, because these instruments are initially designed to address the volatility issue by maintaining a stable value linked to traditional assets. And in my view, this development could be a game changer for the industry. And now, let me explain why this matters. Because as stable coins mature and their volatility risk decreases, we are likely to see expanded adoption across different payment use cases. And this could provide an entirely new rail for global money movement that combines the benefits of blockchain technology with the stability of traditional assets. And based on my experience working with the financial institutions, I believe that we are at a crucial turning point where these alternative payment trails are becoming increasingly viable for mainstream adoption. And the key will be finding the right balance between innovation and stability. The next one. And now I would like to share some statistics about the adoption of modern payment methods across different markets. And what we are seeing is quite in terms of how different technologies are being embraced around the world. And now let me start with the contactless cards. The data shows that it took about between 15 to about 8 to 15 years for tap and go cards to reach adoption rates of 60 up to 95% across leading markets. And this relatively long adoption curve tells us something important about how payment technologies mature. And what I find interesting here is the adoption rate of account-based real-time payments. And in just 4 years, for example, these systems achieved double-digit adoption rates. And this, for sure, this rapid uptake suggests a strong market appetite for instant payment solutions. And however, what's most fascinating to me is that we are seeing in emerging markets. And in these regions, for example, mobile money has actually been adopted faster than traditional card payments. And this isn't just about consumer preference, it's about infrastructure constraints driving innovation even. And from my experience working with various markets, for example, I have observed that these adoption patterns often reflect local market conditions and infrastructure readiness. And this is why we see such significant variations between countries. And understanding these adoption patterns is crucial for anyone involved in the payment strategy, as it helps predict how new payment technologies might evolve in different markets. Next slide. And now I want to walk you through a view of how banks are strategically planning to enhance their payments profitability. And this diagram reveals some compelling trends across business strategy, operating models, and technology considerations. And let's start with what I find most striking. It's 52% of banking are planning to invest in third-party products and offerings to develop innovative propositions. And this is the highest percentage we see on the chart, because it tells us something important about the industry's direction. And in terms of operating models, you can see that just 45% of banks are looking to orchestrate an API-based ecosystem and move towards a platform-based business model. From my experience, for example, this shift represents a fundamental transformation in how banks approach their payment services. And what's particularly interesting on the technology side is that 38% of banks are considering bank-as-a-service models for business functions like processing to reduce costs. And this reflects a growing recognition that not everything needs to be built in-house. And I also want to highlight that 28% of banks are planning to divest from non-profitable business functions, because this is a crucial strategic move that shows banks are becoming more focused on and more efficient in their operations. And in my view, these trends collectively indicate a major shift in banking strategy that is moving from traditional banking models towards more collaborative and platform-based approaches. And the future of payments clearly lies in ecosystem partnerships and technological innovations, therefore. Next slide. Now, let me share with you some insights from McKinsey's research about the trajectory of global payments revenue. And what we're seeing here is a compelling story of resilience and growth. And first, let me draw your attention to what happened in 2020. And the industry experienced a 5% decline in global payments revenue, dropping to $1.9 trillion. And this was unprecedented, but what's most interesting is how quickly the market began to recover. And looking at the regional breakdown, APAC, APAC continues to be the powerhouse of growth, starting from $0.5 trillion in 2011 and projected to reach $1.3 trillion by 2025. And from my experience analyzing these markets, so this growth is driven by a rapid digitalization and increasing financial inclusion. And what I find interesting, noteworthy, is the consistent share of banking revenues that payments represent, which is hovering around 37 up to 40% throughout this period. And this tells us something important about the fundamental role of payments in banking business models. And looking ahead to 2025, we are projecting a return to historical growth rates of 6 to 7% annually, pushing the global revenue to approximately $2.6 trillion. And in my view, this represents not just recovery, but transformation as new payment technologies and methods drive growth. And the stability of this growth across regions, particularly in major markets like North America and EMA, suggests that innovation in payments continues to create new revenue opportunities even in well-established markets. Next slide. And now I want to discuss some revenue opportunities that are emerging in the payments industry, particularly in commerce, in enablement and adjustment services. And the numbers we're seeing are quite remarkable. Because let me share a striking figure with you. For example, we are looking at over $200 billion in addressable revenue potential. And this isn't just theoretical, because these opportunities are emerging from real services like commerce enablement, fraud mitigation, digital identity solutions, for example. From my experience, these areas represent some of the most promising growth vectors in our industry. And what I find interesting is that providers now have the potential to capture a 50% higher share of merchant IT budgets. And this is a significant shift from the traditional payment processing model, and it's happening through value-added offerings. Next slide. And now let me walk you through some trends we're seeing in the emerging payment methods. What's particularly interesting is the significant gap between current usage and future adoption intentions. And now let's start with the buy now, pay later, or BNPL. Currently, about 20% of customers use this kind of service, but look at the projected adoption. Around 60%, for example, plan to use it in the next couple of years. And from my experience, this surge is driven by about 40% of customers who are actively seeking alternatives to high credit card charges. And what I find interesting, intriguing, is the invisible payments category, because while less than 10% currently use this technology, meanwhile, over 45% expect to adopt it soon. And this is directly addressing a pain point where more than 30% of customers report high friction in payments checkout process. And looking at the biometric payments, we can see similar dynamics. Current adoption is around 10%, but future intention is about 50%. And there's a question, what's driving this? So, well, over 50% of customers are concerned about transaction privacy, and they are seeking better authentication solutions. And finally, cryptocurrency payments show an interesting pattern, because while current adoption is below 10%, simultaneously over 45% express interest in the future use. And this is particularly relevant given that 35% of customers are facing challenges without cross-border payments and high transaction fees. And in my view, these trends clearly indicate a significant shift in payment preferences driven by specific consumer pain points rather than just technological innovation. And now I want to discuss with you three critical developments in the evolution of payment systems interoperability that are actually reshaping how we think about the cross-border payments. First, let's talk about instant payments adoption. So what we are seeing in an expansion is, at the domestic level, for example, and from my experience working with financial institutions, this domestic growth is laying the crucial foundation for international connectivity. And the second key element, which I find particularly fascinating, is interoperability. And this is really about enabling effective global money movement. And we are seeing initiatives like P27 in the Nordic region leading the way in creating seamless cross-border payment capabilities. And what I consider here most fascinating is what I call the next frontier, the drive for compatibility between different payment message formats. And so, for example, the adoption of ISO 222 is really playing a crucial role here, eventually creating a universal language for payment systems worldwide. And hereby, let me emphasize why this matters. Because when we connect clearing and settlement capabilities across borders, so we are not just making payments faster, and we are fundamentally transforming how money moves around the world. And the impact on business and commerce is profound. And in my view, these developments represent one of the most significant transformations in the industry of global payments infrastructure. Next slide. Now, I want to share with you some developments in how government-backed mobile money initiatives are revolutionizing even financial inclusion across developing countries. And let me highlight some particularly successful example. For example, systems like M-Pesa in Kenya or PromptPay in Thailand and India's Tech in India, they all have achieved extraordinary results in expanded financial access. And what makes these initiatives so successful is their leveraging of mobile phone infrastructure. And here, what I find interesting about this trend is how mobile technology is being used to leapfrog traditional banking infrastructure. And instead of, for example, instead of building physical bank branches, these countries are putting banking services directly into people's phones. And from my experience working with these markets, some of these markets, I've observed that the key to success here lies in the government backing, because this provides the necessary regulatory support and builds public trust in the systems. And the impact is truly transformative, because we are seeing rapid adoption rates in countries where traditional banking services were once limited or inaccessible. And this is particularly important when you consider the mobile phones have far greater penetration than traditional banking infrastructures in these regions. And therefore, I believe this approach represents one of the most effective strengths for advancing financial inclusion and developing economy. So before we move to the next slide, let's make a break for 10 minutes, if you don't mind. Okay, let's continue our lecture. Do you hear me well? Do you see the presentation? Everything is okay?
Yes, video proof.
Yeah, great. Okay, the next slide. And now I would like to draw your attention to a critical global financial inclusion challenge that we face, which is the unbanked population worldwide. And here, let me show you the striking regional disparities in financial inclusion across different parts of the world. And looking at this map, we can see a dramatic difference between developed and emerging regions. And in, for example, high-income or OECD countries, only 8% of adults are unbanked, and that's about 60 million people. And however, the situation is very different in the other regions. And what I find interesting concerning sub-Saharan Africa, where, for example, 80% of adults, approximately 326 million people, remain unbanked. And this is followed by the Middle East at 67% or 136 million adults. And Latin America at 65% or for about 250 million adults. And various parts of Asia ranging from 49 to 69% of unbanked populations. And these statistics tell us something very important about the digital payments landscape, which is there's an enormous untapped potential for financial services in developing regions. And when I consider these numbers, for example, I see both a challenge and opportunity for fintech innovation. And also in my experience studying financial inclusion, I have observed that mobile technology and digital payments are becoming key drivers in bringing banking services to these unbanked populations. And this is particularly evident in regions like East Asia and Southeast Asia, where despite having large unbanked populations, we are seeing rapid adoption of mobile payment solutions. And now let me emphasize that understanding these geographical disparities is crucial for anyone working in digital payments, as it helps identify where the greatest opportunities for growth and social impact lie. Next slide. Now, I'd like to discuss an important shift happening in payments business models, which is the move towards subscription-based pricing and banking and in financial services. And this diagram here on the right illustrates the fundamental concept behind subscription payments. And what we've seen here is a transformation in how financial institutions monetize their services. Instead of, for example, relying solely on traditional transaction fees, banks are increasingly adopting subscription models where customers pay a regular fee for a bundle of services. And let me explain how this works. As you can see in the diagram, there is a continuous flow between the company and the customer. And the company provides ongoing products or services while the customer makes periodic payments. And this creates a predictable revenue stream for the company. And in my analysis of current market trends, for example, I've noticed that this is particularly relevant as we face increasing pressure in transaction margins. And banks are looking for the new ways to maintain profitability, and therefore subscription models offer a compelling solution to this. And what's particularly interesting is how interchange fee structures are evolving alongside with these models, because we are seeing a reemergence of fee posts through strategies where, for example, interchange costs are more transparently shared with consumers. And from my research, I can tell you that this shift isn't just about revenue, It's about creating more sustainable and more transparent pricing models that better align with how modern consumers use financial services. And now let me share with you some developments in the payments industry, and especially in the M&A landscape of this industry. And recent market activities tells us a compelling story about where the industry is hidden. And for example, I've been closely tracking major acquisitions in this space, and there are three areas that stand out. First, we are seeing significant interest in buy now, pay later capabilities. For example, you can take the Afterpay acquisition, for example, and this overall reflects the growing importance of flexible payment options in modern commerce. And another trend I'm particularly excited about is the increased focus on global remittances, especially exemplified by deals involving companies like Wise. And this shows how the industry is responding to the growing demand for efficient cross-border payment solutions. And what I find most intriguing here is that the strong emphasis on banking enablement technologies, because the acquisition of companies like Amount, for example, highlights how traditional financial institutions are prioritizing digital transformation through, for example, banking as a service capabilities. And based on my experience in analyzing these markets, I can tell you that these M&A partners aren't random. So because they reflect a strategic shift in how payment companies are positioning themselves for the future. And they are not just buying technology, they are acquiring capabilities that will define the next generation of payment services. And finally, looking ahead, I expect that these trends will continue as payment companies seek to build comprehensive platforms that can handle everything from commerce enablement to even cross-border transactions seamless. Next one. And now I want to discuss how digital banking challengers are revolutionizing payment experiences by leveraging real-time payment infrastructure. And now let me share some concrete examples that illustrates this transformation. And I've been also studying cases like Revolut, like Current and Aspiration, and these challengers are doing something really interesting because they're not just offering banking services, they are fundamentally reimagining how payment works in our daily lives. And I think that what makes these challenges particularly is how they are integrated with faster real-time payments, or RTP networks. And in my analysis, for example, I found that they're using the connectivity to create unique value propositions that traditional banks simply can't match. And now let me give you some specific examples of the innovations they are bringing to market. Like, for example, instant peer-to-peer transfers, early access to payrolls, immediate deposit availability, and even real-time rewards. And these features are completely changing customer expectations about banking and payments. And there is a compelling thing about this trend is how these challenges are providing the modern payment infrastructure that isn't about just about the speed. It's about creating entirely new types of financial experiences that resonate with today's consumers. And looking at these case studies, so it's clear to me that the future of banking will be defined by those who can best leverage real-time infrastructure to create meaningful differentiation in the customer experience. Next slide. And now, I would like to explore how open finance APIs are creating new revenue streams in the payments industry. And let me share some insights from our research. According to Finastra's data, which I find particularly telling, for about 85% of customers are now open to sharing their financial data. And this represents a fundamental shift in consumer attitudes toward data sharing. And it's creating unprecedented opportunities for payments firms. And what I find most about this trend is how it's transforming the traditional payment business model. Because through customer consent-based data sharing, payment companies can now monetize data in ways that weren't possible before. And furthermore, let me explain why this matters. Because when customers grant consent to for their data to be accessed through APIs, then payment companies can analyze spending patterns or predict financial behaviors and create personalized financial products. And this isn't just about processing transactions anymore. It's about delivering value through data-driven insights. And in my experience studying, for example, payment ecosystems, I have observed that companies who successfully leverage these APIs are able to create entirely new revenue streams through data monetization and through insights-based services. And the key takeaway I want to emphasize is that open finance APIs aren't just a technical innovation, so they are fundamentally reshaping the business model of payments firms and creating new opportunities for growth. Next slide, just a second. Well, and now let me share with you development in payment technology that's transforming how we interact with the everyday devices. And we are seeking convergence of payments and the Internet of Things here. So, and what you see on the diagram here is the modern payment ecosystem that enables embedded payments. So from the end user through various layers of technology and security and all the way to card networks and banks. And here the key innovation is how software can now integrate payments directly into our connected devices, whether it's our smart appliance or transportation systems or entertainment devices. And this isn't just theoretical, it's happening right now. And I find it particularly interesting that just the mobility sector alone is projected to generate over $400 billion in payment transaction value by even 2030, according to Uniper Research. And that's a staggering figure that shows the scale of this transformation. And you can consider how this works in practice. For example, your connected car can automatically pay for parking or charging. Your smart fridge can reorder groceries, for example, and your entertainment system can handle subscription payments, all without any mutual intervention from you. And the beauty of this system lies in its invisible integration, which is payments become a seamless part of the device functionality. And they are protected by multiple layers of securities, or as shown on the diagram, and from the payment facilitator through the acquiring and issuing banks. And this evolution represents a significant shift from traditional payments methods to truly embedded financial services, creating new revenue streams, for example, and enhancing user experience across multiple sectors. Next slide. And now let's discuss the critical aspects of payment technology that's undergoing significant transformation, which are security and fraud prevention. And this is an area I'm particularly passionate about because it directly impacts user trust and system integrity. And what's really is the shift we are seeing in investment priorities. According to the TPG report, for example, biometric security is expected to receive more than 4 times the current investment by 2026. And why such a dramatic increase? Well, we are moving well beyond these fingerprints. And in my view, one of the most developments in this space is the emergence of homomorphic encryption. So now, I know that's quite a mouthful, but let me explain why it's so important. And this technology allows us to perform calculations on encrypted data without decrypting it first. So think about what this means for open banking APIs, for example. We can now analyze and process sensitive financial data while keeping it encrypted throughout the entire process. And this is a game changer for the security and privacy. And here, the beauty of these advances is how they solve multiple challenges simultaneously. And biometrics, for example, make authentication more secure, yet more convenient for users, while homomorphic encryption helps us fight fraud without compromising consumer privacy. And what is really interesting and compelling here is how these technologies complement each other. Together, for example, they are created a new paradigm in payment security that's both more robust and more user-friendly than traditional approaches. And this isn't just about preventing fraud anymore. So it's about fundamentally reimagining how we can protect financial transactions in an increasingly and interconnected world. Next. And by this, I want to share with you a global transformation that's happening in the world of central banking. And this map you can see represents the current state of central bank digital currency, or CBDC, development worldwide. And what is interesting here, I find interesting, striking, is that we are tracking 131 countries and currency unions, for example, and the level of engagement is remarkable. So let me break down what we are seeing. Hereby, for about 11 countries have already launched their CBDCs, and 21 are in pilot phase, and 33 are in development, and 46 are in research phase. And the color coding on the map tells an interesting story because the pink areas show launched CBDCs, green shows pilot projects, and turquoise indicates development stage, and the blue here represents research phase. And there are also some gold areas showing inactive projects and a couple of red spots for canceled initiatives. And in my experience studying digital payments, this is unprecedented because we are witnessing a fundamental shift in how central banks use digital currency. And they are driven by several key factors. For example, the desire to modernize payment infrastructure and also enable programmable money features and maintain monetary sovereignty in an increasingly digital world. And what is really interesting here about this development is the potential for programmable money through smart contracts, for example. So let us imagine automatic tax payments, instantaneous settlement, or self-executing financial agreements, all built into the currency itself. And however, it's important to note that different regions are taking different approaches, and some are focusing on retail CBDCs for public use, while the others are developing wholesale CBDCs, for example, for interbank settlements. And each approach has its own technological and policy implications. And finally, looking at this map, I can confidently say that CBDCs will play a crucial role in shaping the future of global payments infrastructure. Next slide. Now, let me walk you through what I consider to be the three critical investment areas that are reshaping the merchant acquiring business. And this is particularly relevant as we are seeing a significant transformation in how acquirers operate and deliver value. And recent market activity has been quite telling. So, because we are seeing notable deals that highlight where the industry is hidden. For instance, Pine Labs has been investing heavily in QR enablement, while companies like FIS, for example, and Fiserv are doubling down on analytics capabilities. And what is really interesting in WEX, for example, and its strategic move toward platform cloud migration. This isn't just about cost savings. It's about creating a foundation for future innovation and scalability. And these investments serve three crucial purposes that I want to emphasize. First, they allow acquirers to scale their products flexibly across different channels. Second, they enable the leveraging of richer data for better decision making. And third, they create more seamless integration possibilities through standardized APIs. And also in my experience working with the payment technologies, so I have observed that successful acquirers are those who can effectively combine all three elements. For example, cloud infrastructure, sophisticated data analytics, and robust API connectivity. And the real power here lies in how these technologies work together. Because cloud platforms, for example, provide the scalability and flexibility, and also analytics deliver the insights, for example, and APIs also enable the connectivity that makes it all work seamlessly. And looking ahead, I believe that these investment areas will continue to be crucial as merchant acquirers evolve from simple payment processors into comprehensive commerce enables. Next slide. Well, now I want to discuss some developments at the intersection of traditional payments and emerging digital technologies. And now we are seeing convergence between established payment systems and new digital frontiers. Let's look at some concrete examples. For example, PayPal's crypto rollout has been particularly interesting, and Visa's partnership in this space demonstrate how existing payment infrastructure can bridge the gap to digital assets. And these aren't just experiments, so they are strategic moves leveraging established payment networks connectivity advantages. And what is really interesting and compelling here is how this convergence is happening across different digital asset classes. It's because it's not just about cryptocurrencies anymore. We are, on the other hand, we are seeing integration with various Web 3.0 and these type of applications and metaverse platforms. And the potential here is enormous when, for example, you consider that we are building bridges to connect with the next billion digital consumers. And this isn't just about serving existing users differently. It's about expanding the entire payment ecosystem. And one aspect that fascinates me is the emergence of embedded payments for virtual economies. And you can think about seamless transactions within virtual worlds. For example, NFT marketplaces or decentralized applications. And this is not a theoretical concept anymore. So because they are becoming real business opportunities. And from my perspective, the key to success in this space will be um, uh, in the field of building reliable, secure, and user-friendly bridges between traditional payment systems and these new digital environments. And the companies that can effectively create these bridges will be well positioned for future growth. And looking ahead, I believe that we will see even more innovation as payment firms continue to adapt and to evolve alongside with these emerging technologies. The next slide. And now I would like to share with you some predictions about the future of payments that I believe will fundamentally change how we think about transactions. And first, and this is something I'm quite confident about, we are moving towards a future where the vast majority of payments will be digitized. And for example, physical plastic cards are, as we know them today, will become increasingly obsolete. And this isn't just about the trend, it's a fundamental shift in payment technology. And another interesting prediction is about mobile wallets. So contrary to what some might expect, we are not likely to see one dominant form of mobile wallet emerge. In fact, I predict that NFC technology, which is currently prevalent, will eventually be replaced by newer, more advanced technology. And what I find intriguing is the growing role of biometrics, because we are moving towards a future where more transactions will be verified using sophisticated biometric methods like retinal scanning, for example. And this isn't science fiction anymore, so it's becoming reality. And you can think about the implications of these changes. So we are now just we are not now just talking about new ways to pay. We're talking about fundamentally reimagining the entire concept of payment and its authentication and security. And based on the recent researches in the industry, I believe these changes will happen faster than many people expect, because The technology is already here. It's just a matter of implementation and adoption. And this transformation will require significant adaptation from, say, both consumers and businesses. But ultimately, it will lead to more secure and convenient payment experience. Next slide. Now, let me share a set of compelling forecasts that I believe will reshape the payment landscape in the coming years. One trend I'm particularly excited about is the evolution of in-app payment buttons. These are becoming the new standard for digital transactions. And we can think about these, how seamlessly they may be integrated in our digital experiences. For example, this is just the beginning, as to my opinion. And another development is the wider adoption of pay buttons, like what we see with Amazon, for example. But what's really interesting is how this technology is expanded beyond simple e-commerce. And we are seeing these payment solutions become more sophisticated and context-aware. And in my view, one of the most significant shifts will be in merchant behavior, because we are going to see more merchants embracing negative purchase options and auto ship features, for example. And this is about making recurrent transactions completely, I would say, seamless for consumers. And perhaps most importantly, I predict that plastic cards will be ultimately tokenized. And this isn't just a technical change, it's a fundamental transformation in how we think about the payment credentials and security. And another thing is how they are all these things interconnected, because the tokenization of cards enables better security for digital payments, which in turn supports the growth of in-app payments and automated purchasing systems. And these trends represent not just technological evolution, but a complete reimagining of the payment experience for both consumers and merchants. So now let me summarize the key points from today's discussion about this evolution and future of digital payments. And these are several crucial trends and developments that I want you to take away from this lecture. First, consider the journey of digital payments. So from ancient commodity-based exchanges to today's instant and real-time money movement systems. And this evolution shows us how payment technologies continuously adapt to meet society's needs. And the most interesting thing and the most significant thing here is the shift we are seeing in the revenue models, because the industry is moving away from simple transaction fees toward value-added services and analytics-based personalization. And this is where the future growth opportunities lie. And here, I want to emphasize the importance of platformization through cloud technology and open banking even, because while these drive innovation, they also introduce new risks that need to be managed carefully. And looking at the emerging technologies, like, for example, blockchain and CBDCs, so they promise greater efficiency. But, and this is really crucial, they require complex transformational processes. And we are not just talking about technical change, but institutional and regulatory ones as well. And it's to observe that the regional variations in adoption patterns are taking place. Because, for instance, In Southwest Asia, partnerships are driving innovation, while in the European Union, regulatory frameworks are shaping the landscape. And a key demographic trend we have observed is how younger customers are accelerating disruption by demanding more flexible, more seamless experiences. And this is fundamentally changing how payment services are designed and delivered. And finally, while the payment sector has been resilience or has shown resilience across economic shocks, so we must remain mindful and consciousness of the rising risks from growing system interdependencies, because this is a balance we must maintain as we move forward.